This is my analysis of the stock market for this week. We're going to look at the S&P 500, the SPY, and then we're going to take a peek at the looking at our multiple time frame indicators that's on our chart streams that I think that you're going to find quite interesting. So let's take a look as we switch over to our weekly chart. I'm going to move off of Bitcoin here, which I showed earlier in the show, and over to the weekly chart of SPY, and just come right in here. So last week we showed the same chart, and on that box, on that green box in the bottom, we talked about the S&P 500 conditions. Now those conditions have barely changed because the market has barely moved. And what we see here is that we have positive momentum conditions, positive cycle patterns, and our phasing. In other words, where are we now in that cycle? Well, we're in rising phases in the intermediate and the short term. What's a little bit different in here is that the short term has the rising fade, which was moving down, and we thought it was bottoming or getting ready to bottom. The bottom was completed, and now we're about 6 days off of that low. However, the Russell is the one that's acting much weaker, and that one is giving us a lot of suspicion about what the condition of the market ultimately is. For those of you that are looking at this for the first time, these are cycle brackets on the bottom. They give you the ideal lows. And when you have two of them coming together is where the biggest downside risk is. And when you have a market that refuses to tick down, there are hugely strong momentum conditions that are playing on the market on the upside that come from longer time frames, specifically the monthly charts. This is a picture of an extremely strong market that goes basically from positive momentum here on the reversal scout to basically just flattening out during corrections and then moving up again. Little dip right over here on this little stronger downside move. And when it came down through that 78.6%, as I said last week, then that gave me a warning that it was the odds favored it not being able to move to a new high. The probability of getting to a new high was only about 30%, and it was able to do that. So now it's stuck in this fib confluence right over here. You could see 3 weeks that we've been in there right now. And as I said in the beginning of the show, we have a very mixed market where we have money beginning to move out of financials and healthcare and energy, which is topped, and specifically moving sharply out of the low cap stocks and moving in, again into another surge in the very extended growth stocks and those stay-at-home stocks. I showed an illustration of that again also in the whole show. So if you're only watching a clip right here, then please do go watch the whole show. There's some really informative stuff in the beginning of the show. So here we are stuck right over here. When we get into those yellow corrective phases, that's when the probabilities increase of sizable declines. This is the one in the pandemic in here, moving down to those nested bottoms. This one over here was about over 10%. This one was close to 6%. This one only 3.6%. The average is really more like about 6% during these things in a bullish market. It's much deeper in a negative market, which would give you about a 250-point decline in here in the S&P 500 or a 25-point decline here in the SPY. We're looking for that in here, and that points into this period in towards mid to late December right in here. And we believe, as we said in the beginning of the show, that there will be kind of a bungee jump in here where it has some brief period where there's a lot of selling, but then you get into the next rising phase, which occurs over here. And I'm just going to show you that right over here, where this then would then be moving up after that, and then further advances that take you into the beginning of next year. So that's that next cycle right over here, and that's why we look for the peak in the market in Q1 in this next cycle that you see over there. So we're looking for a decline in here and a bungee jump to the downside, and then coming back up and popping up. And that would give an opportunity to buy some of the stocks that may be on your shopping list in here. So that is a look at the SPY. Now I want to look at the stock market conditions a little bit closer. Here's the special offering, and I'm going to go over here to this page, which is the Ask Slim chart streams. These are amazing. We essentially broadcast our proprietary indicators in an intraday on the S&P 500 and the NASDAQ and the Russell on 15-minute charts. And these over here, these 10 other charts, are multiple time frames, 4 different time frames with our proprietary indicators. And I'm going to show you what those look like right now so you can get a good sense for the conditions of the market as we look at it. Here is SPX, the S&P 500. And what I'm going to do, see that arrow shows up, and I'm going to click on that and I'm going to run this. And this now becomes a live chart. So what we're looking at, and it kind of darkens the bottom of the page when I move my mouse, but the very left little chart, skinny one you see there, is showing the weekly chart, which shows upside momentum is strong. The second chart for the S&P 500 is the daily chart, which shows our cycle analysis in there and shows the likelihood that we're still going to see some upside in here before the corrective process takes a hold. The next chart is the 2-hour chart, which is right over here, and that gives important analysis also, which shows that momentum conditions are still moving up, both in the slim ribbon and the reversal scout. And now, as this SPY moves up, SPX moves up, it's moving into what we call, for the 15-minute chart, through the resistance there and into the acceleration zone, which could get you a pop yet today on the upside. So some very good strength that you see there. I also want to show you that you get our, on the bottom here is the slim ribbon PO and those positive signals on the 2-hour and the positive signals there on the daily and the 2-hour. If you look way at the bottom over here, you can see that is the option bias indicator. It's way at the top, those green dots. That is P3. That is the most positive it can be. And over here is the Ask Slim market condition indicator on the bottom, which keeps darkening right there. And that is at a very bullish condition also. So looking at the S&P 500 on the SPX, that looks really positive. I want to switch over though, and I just want to show you to see the value of looking at the different indexes, and we'll just look at the Russell also, because the Russell has turned weaker, and I'm going to go live on these charts. Again, we're broadcasting these, and if you become a level 3 member, you'll be able to see our live chart streams. And our SIR snapshot with the 15-minute charts is for level 2. So this is different, and you can see in here what's going on is that you get this downward turn in momentum here on the daily, and potentially setting up a much weaker cycle pattern in here. But look what happened here is it turned over and momentum went negative. You could see that on the 2-hour chart, where this has been negative, and this is going up on the S&P 500, but it's going down on the Russell. And if you look at the 15-minute chart over here, that failed and is now moving down, as you can see, versus the S&P 500 moving up. So if you're a pair trader, man, does this give you fantastic information. Also, you could see on the bottom left over here, you'll notice those little orange dots. That was a signal on the option bias indicator that it had reached the condition of extreme overbought and would likely reverse. And that was absolutely perfect. You can see the market condition indicator on the bottom here starting to roll over. So overall, what this shows is a much, much weaker condition for the small cap Russell than I showed you in the S&P 500. The overall story, when I look at this, is a story of the stalling here in the stock market, even though it's trying to move up and you're getting some movement up. It's getting lifted by Apple and Amazon that got upgraded today, positive comments by JP Morgan, but the market is stuck and stalled right over here. So we're really looking for just a matter of days before the market goes into this correction that we're expecting. It would likely be a small correction. We'll just look at something like 4.5% to 6.5%, and that setting up a condition where the market is likely to be moving up again into the first quarter of next year. That is a look at the SPY, a look at the stock market. I hope you found it incredibly informative when you've looked at this. If you want to get our proprietary indicators on those live charts, please do become a level 3 member. You can use the special that we put out today, which is to give the gift of Vast Slim, which is an amazingly low price for you to try it in a non-recurring membership. So I think you'll find it absolutely fantastic.